Good morning, hello and welcome to Opening Bell. Thank you so much for joining us on Moneycontrol. We are live on our YouTube feed. I'm Surabhi Upadhyay and this is a Thursday morning. The bulls have managed to prevail. They have managed to come and recover from the lows. The Nifty now close to 25,800 and today actually we have very decent support from a lot of global cues. The only slightly sour headline is coming in from crude oil prices. We'll talk more about that. IT continues to be in focus. The AI summit continues to be underway and there's lots more expected from New Delhi today. So let's get started. Here are the headlines. Wall Street ends higher, led by gains in technology and financial stocks as investors pass the latest Fed minutes that revealed a sharp divide on the future rate path. In Asia, South Korea's Kospi surged to a record high, while markets in China, Hong Kong and Taiwan remained shut for the Lunar New Year holiday. Back home, the GIFT NIFTY signals a mildly positive start for Indian equities. Crude prices jumped nearly 4% after US Vice President J.D. Vance warns that military strikes on Iran remain on the table amidst escalating tensions. Gold also extended gains on safe haven demand, though prices stayed below the $5,000 mark as investors recalibrate expectations on US rate cuts after FOMC minutes. MCX withdraws additional margins imposed on bullion futures, removing the 3% extra margin on gold futures and 7% on silver futures with immediate effect. Google CEO Sundar Pichai met Prime Minister Narendra Modi, saying India is uniquely positioned in the global AI race. Google DeepMind CEO Demis Hassabis added that India could play a leading role in AI adoption, while cautioning about potential misuse of the technology by bad actors. Prime Minister Narendra Modi will inaugurate the India AI Impact Summit 2026 today at the Bharat Mandapam in the presence of around 20 heads of state. The Prime Minister will receive visiting leaders at the venue before delivering the opening address later this morning. On Wednesday, he held 9 bilateral meetings with global leaders and business executives on the sidelines of the summit, including discussions with Google CEO Sundar Pichai and venture capitalist Vinod Khosla. Okay, so it's a packed Thursday coming up. The bottom line really is that bulls have had the advantage. They've managed to prevail and they've managed to claw their way back towards this 25,800 mark. The question is what next? So let's start by looking at global cues. US markets actually made some headway as well. Finally, there was some positivity and the buy on dips was playing out on Wall Street as well. After the slam dunk that we've seen in technology stocks yesterday, at least the AI part of the market was recovering. Names like Nvidia and Qualcomm, Broadcom, they all had a little bit of buying, which was very, very evident. The S&P 500 was up about 0.5%. The Nasdaq actually did better because it was largely tech-led. The Nasdaq was up almost 1%. The Dow gained about 0.3% as well. Now, what did those FOMC minutes say? The minutes coming in from the last Federal Reserve meeting. The minutes are showing that the Fed is very divided about the future path of rate cuts. In fact, there are some Fed members who feel that even rate hikes could be on the table if inflation does not behave itself. So there is a clear divergence between whether the Fed should keep focusing on keeping inflation low or whether the Fed should be more cognizant of the risks building up in the labor market. So divided Fed meant that, it was a little bit of unease about expecting more rate cuts ahead, and that showed up in the way the dollar behaved, in the way yields behaved actually. The dollar was mildly higher. It continues to climb above the 97 mark. That's the dollar index. And US yields saw a fair amount of action as well. The yield inched up from 4.05 to 4.08% as the market is feeling a little uneasy about whether the Fed indeed will offer more rate cuts as we go forward into the year. The other major headline is coming in from oil prices. There's suddenly this geopolitical risk premium that's building up because of the statements that came in from J.D. Vance. Now, what did Mr. Vance say that drove Brent oil prices back above $70 a barrel? He said that it is very clear, and I'm quoting him verbatim, it is very clear that the president has set some red lines that the Iranians are not yet willing to actually acknowledge and work through. Now, this was in a bit of a disconnect with what the Iranian foreign minister had said just a day earlier, where he said that the talks were progressing rather well. But this seems to indicate that the military option is still very much on the table. And Mr. J.D. Vance went on to actually acknowledge that if diplomacy does not succeed, then the military option is very much on the table. And remember, Iran itself was conducting those war games, quote unquote, and it had shut down the Strait of Hormuz on Tuesday. So all of this put together has got the bulls back in the oil market, and we've seen that big flare up on oil, a little bit of a rise on gold as well, but then gold was also subdued. The other factor was what the FOMC minutes were saying, that maybe they don't cut rates that much. So there were two twin different factors playing out on gold. Asian markets, well, some of them are coming back from that Lunar New Year holiday. China and Hong Kong are still shut, but markets like Singapore are back. And we've got South Korea back. The South Korean market actually surged very, very nicely, taking its cue from the positive tech action that we saw on Wall Street. So Nikkei is up, South Korea is up. Singapore was up about 0.5% last time I checked. So most of these markets are looking strong. The GIFT Nifty is indicating that we'll probably have a cautiously optimistic start. Buy the dip has been the tenet of the market, and that has taken the Nifty back towards 25,800. But this is where the challenge begins, because the zone of 25,900 to about 26,000 is actually a congestion zone. This is where the Nifty has been failing. Last several times it's approached the 26,000 mark. Let's see if it can be different this time around or not. The good news is that the buying in the Indian market is being backed by foreign institutional buying. FIIs were net buyers. They bought cash stocks worth about 11,050 crores in the trading session yesterday. Second consecutive day of a positive FPI number, so that's good news. Domestic institutions also added to that tally. They bought stocks worth about 440 crores. So let's see how this plays out. And finally, yesterday the decline in tech stocks told us that it continues to be a very nervous space in the market. There is no clear, takeaway whether the worst is over or not, and it's still a very big debate. There are bulls and there are very clear bears on Indian IT services. So watch that space closely. And again, we'll look out for more headlines that will come in from the AI summit. Prime Minister Modi will be inaugurating that event at around 9:45. Then his speech comes in around 10:15. And of course, we'll get you all the live action here on Moneycontrol. So that's the setup. Let's get to our experts. We have Nirav Karkera joining in from FISDM, and we have Chandan Taparia joining in on the technicals from Motilal Oswal. Thank you, gentlemen, for joining in. Good morning to both of you. Chandan, morning. Let me open with you first. Let's just start understanding the technical setup. What have you made of the small little moves that the Nifty has made and the fact that the dips are still getting bought in this market? So does that make you optimistic on the index today?
Good morning. Thanks for having me, Surabhi. And I believe that market setup is positive to range bound and every small decline is being bought. I remember that 25,400, 25,450 is a multiple support juncture for the Indian market. I think in last 6 to 8 months, 5 to 7 times the support acted well to provide the recovery. But whenever the market goes towards 26,000, some of supply happens and market again drifts lower. But I believe this time structure is slightly changed, and because of that we are expecting market to head towards its all-time high. If I look at the data setup, put call ratio headed to 1.12. India VIX decline in last 2 days and now it's at 12 marks. FIs were selling in last couple of weeks, but now they are turning slightly positive from last 2-3 days. In fact, on the last day they bought to the tune of around 1100 crore. And the important part is FI's long short ratio improved to 23%. So these 4 data setup are giving slightly bullish tone on the market, and that's why we believe that index can head towards 26,000 and beyond. So as of now, till Nifty holds above 25,650, any decline could be bought for an upside move towards 26,000 to 26,250 and probably head towards its all-time high of 26,375. Now, if Nifty has to move higher, which counter will do well? So I believe contribution will be there from the Bank Nifty, and that is already near its all-time high, and officially it has given a highest ever close. Supports are shifting higher. In last 3 days, Bank Nifty recovered by more than 1,500 points from 60,000 to 61,500. Now its all-time high is just 200, 250 points away. That was made on 3rd Feb after the announcement of the trade deal. So I believe with the support of 61,000, Bank Nifty has potential to rally towards 62,000 to 62,250 kind of level. So Nifty looks positive with buy on decline, and this time we can head towards 26,000 and 26,250, and support will be there from Bank Nifty, selective heavyweights counter from CPSE index, and few power and energy counter along with few private bank could be in action to take the index to new high territory.
Okay, that's pretty comprehensive. So you're saying we're heading higher, probably going to take aim at our previous all-time high. And you're saying CPSE, so basically PSU stocks, some private banks, and some power stocks. They look good, right, Chandan?
Exactly.
Got it. I'll come back to you, Chandan, for more specifics on which of these stocks that one can trade. I'll come back in just a minute. By the way, we have some questions coming in on our live chat. And viewers, if you have any individual stock questions or trade questions, this is the time. Next 10 minutes, our experts are here. And we'll see if they have answers for you. Gotkovic was asking, how is the trend for the Nifty today? I think you've got your answer, Gotkovic, because Chandan's very clearly said that it's a completely positive setup. And, buy the dip and try and ride it up. That seems to be the advice. We have Nirav also with us. Nirav, morning. So, how are you feeling? And on fundamentals, which pockets or which are the active areas that you are optimistic on?
Hi, Surabhi. Good morning. So we are pretty excited. I feel a few good things, with some of the Asian markets coming back into action post the lunar holiday. We are expecting some bit of action on our domestic bourses as well, especially considering the way FIIs are making a U-turn back into, Indian equities. The expectation is that with newer markets opening up post the holiday, the flow should be slightly more healthier. Of course, there is some bit of dampening sentiment stemming out of the crude oil whipsaw that we witnessed. But this is something that is expected to be very sensitive to developments, and we don't really expect markets to react very wildly to this piece of information alone. Largely, the market setup looks set for a positive, barring a few sectors, especially IT. We believe that today could be a good day for markets broadly, and from here on, our outlook is neutral to optimistic, and tilting. Our base case is neutral, but in our good case expectations, we could see Nifty finally break out of the next zone of 25,800 to 26,000.
Okay, all right, got that. We have more viewers joining in, by the way. Harshraj Singh wants to know more about South Indian Bank. Umesh, you want stock of the day? Just hang on for a second. Usually we take our stock of the day with our guests, just before we thank them. So just stay with us. And we have someone asking about Colgate Palmolive as well. So let me try and quickly get to some of our viewer queries. A lot of trading interest, given that the market seems to be showing some sign of recovery. Chandan, you just said that private banks look good. So let's take up that banking question. If someone is looking for an intraday trade today, or maybe trades over the next 2-3 days, say up till end of the week, Friday or maybe Monday. Now, private banks or PSU banks, and specifically since our viewer has a question on South Indian Bank, if you could just help him out.
Yeah, I think that's a very interesting question, and I think that is the budge of the arts. We are more positive on PSU banks than private bank, but private banks have more weightage, so that will contribute more to the movement of Nifty and Bank Nifty index. So if you ask me the comparative analysis between the PSU and private, then definitely I'll focus on PSU bank. We are quite bullish on SBI, but stock has really rallied well in last couple of months. But still we believe till it holds above 1180, any decline could be bought, and finally we have positional target of 1300 to 1350. But on immediate point of view, we are looking for an upside towards 1250. But what is the trade on immediate point of view? For trading setup, we are positive on the Indian bank. One of the strongest price pattern after other PSU bank. It has given a consolidation breakout on the daily and the weekly chart with a decisive hold above 920 marks. So with the support of 920, I believe Indian bank can head towards 980 to 1000 marks. Now talking about other mid banks, I think counter like Citibank or City Union Bank or other could be in focus. If you talk about CUB, positive to range bound biases there, stock is holding well above its rising support trend line. So with the support of 280, it can head towards 300 kind of level. One can also look at the small banks like IDBI or IDFC. So I think there is a good action. One can participate in the same with the view that major trend is positive, and 3 to 5% kind of move on immediate basis and 15 to 20% kind of movement on positional basis could be seen in most of these private and PSU name.
Okay, so positive on banks overall, like PSU banks more, got that, and we've got some trades there as well from Chandan. Gentlemen, let me just run through some of the stocks that are in news today. It's not a very exhaustive list now that earnings season is over, but there are some interesting names that we should keep on our radar, and then I'll ask you about these names. So the first one is HUL, Hindustan Unilever. The board has approved a 2,000 crore rupee investment. The company is looking at expanding its manufacturing capacity, and this will go into their premium beauty products, the well-being range, the home care business as well. It's a 2-year investment that they're talking about, this capex. Let's talk about Dr. Reddy's. Dr. Reddy's is looking to boost its gynecology portfolio. They've acquired some hormone replacement therapy brands. This is an agreement with Mercury Pharma that they have inked. Mercury Pharma, and this deal is valued at about $32 million. Dr. Reddy says that this acquisition will be strengthening its presence in the premium gynecology therapies in India. So watch for this. NCC has bad news surrounding it today. Why do I say that? The company has been barred from taking any fresh orders or bidding for any fresh orders from NHAI, the National Highway Authority of India. And this is for 2 years. It's a 2-year ban that has come through. The company's subsidiary OB Infrastructure has also been banned from bidding, and this comes from delays from an old order that NCC was executing. This was the Bhoginipur and Bara highway project. The company is saying that it's going to be contesting this ban. It also says that it's not going to impact any of its existing projects. But the question is the future bid pipeline, because a 2-year ban could really dampen the prospects there. So let's see how the market reacts to this. Speaking of orders and construction, BL Kashyap has managed to get an order. The order value is about 300 crore rupees. So watch for BL Kashyap. This is for Greater Noida housing project. So it's in the NCR region. So watch for this. There's a Cochin shipyard that's in news yet again. Remember, Cochin was in news earlier this week for getting a 5,000 crore rupee naval order. Now they've got an order from a French company. This is for the construction of 6 feeder vessels. The order value is 2,000 crore rupees. It's been a good week for Cochin in terms of order wins. We move on then to TVS Motors. TVS Motors has hit the landmark of 1 million units in production in Indonesia. About 95% of that output comprises 2-wheelers. The rest is 3-wheelers. So its Indonesia operations seem to be scaling up very well. So TVS Motors in news as well. Let me quickly go back to our experts. Nirav, NCC first up. Off and on we've seen some of these, issues crop up with construction companies. What do you think of the stock? What do you think of the company overall? And is this ban, if there is obviously a hit on the stock today, does it present a buying opportunity, or would you stay away in general?
So the outlook generally for the company is, cautious at this point in time as we speak, and this ban only worsens the situation further. Of course, it is sensitive to developing situations. We expect NCC to contest it heavily, especially considering that the NHAI mandates and their ability to participate in those mandates at a time where we expect many more tenders to be floated, especially through the next couple of quarters, as at a policy level we ramp up on aggressive infrastructural capex, could deal quite a blow to NCC. So having it on the bench during the season finale is something that NCC also wouldn't want. But again, the outcome is largely unknown. So we would remain cautious on the stock. While it is a key player in the segment, it will have to iron out these issues and resolve it out with NHAI before a decisive call can be taken on it.
We actually have viewers asking about NCC. There is PKB says, that's the ID from which we're getting the question. PKB has been holding NCC at 210, saying, will it be a good idea to average? PKB, you've just got your answer from Nirav there on the fundamentals. He doesn't think so. Chandan, I don't know if you've had a look at these construction stocks of late. Any thoughts on NCC?
Yeah, so the immediate trend is not positive. It has been consolidating, but in the last year, it witnessed a sharp corrective move from 280 to 150 and now holding below its 50-day exponential moving average. In last 2-3 days back, it witnessed a recovery to 162, but again failed to hold. So I believe the trend is mixed. Upside seems to be kept. Major trend is negative. That's why any recovery is captured with the supply pressure. So I'm not much bullish as a trend wise. Looking at the technical setup, one need to follow the support near 142. If it moves and holds above 160, then only the structure will turn positive. So keep the 142 and 160 level in mind for any kind of trend change in the counter like NCCN.
Okay, got that. We've got some questions on FMCG names as well. There was a question on Colgate Palmolive. And actually, Nirav, before we let you go today, there's a lot of news in the sector. There's Lever, obviously, announcing that 2,000 crore rupee investment. ITC and other cigarette stocks have been in focus. Godfrey Phillips, was up some 8-9% yesterday because of the cigarette price hikes coming through. Give us some thoughts. Any preferences in this whole basket? Colgate, ITC, maybe something else? Dabur is going through a management transition. So lots of news in FMCG.
So, as a sector, we remain neutral to slightly optimistic on the entire FMCG pack. In fact, we are tilting more towards the favor of discretionary consumption versus staples because, on account of two things, the growth from here on seems to be very limited, especially in context of the valuations and how much of the growth that has already been aggressively priced in. So consumer staples, FMCG as a broader pack, we are not superbly excited about it, at least from a near to medium term perspective. It could take longer to revive, at least till the earnings trajectory starts actually justifying the rich premiums that it is trading on. So this is a pack that we are not very upbeat on. Of course, there will be splashes and surprises. In fact, if you spoke about ITC, the price hike in cigarettes, this was one of the biggest contemplation that pulled it down at the time when the tax was announced. But now there's a rebound in sentiment around the expectations that the cost will be effectively passed on. Even with capex plans coming in, it is not enough to revive a lot of faith into the sector because now, as we speak, it is just in planning stage. We really need to see how it plays out and how it turns out for margins and bottom line. So at this point in time, it's all hope and promise. Rural demand is picking at a healthy pace, but urban demand still remains subdued. So FMCG as a pack itself, we are not greatly keen, barring a few select names.
Okay, all right. Got that. Take your caution on board. Neeram, thank you for joining in. You have a good day, and we look forward to connecting again very soon. Thanks for being with us. All right, so that's some advice on FMCG names. By the way, there's some queries coming in on metal stocks as well, and metal stocks have been extremely volatile, one day up, one day down. This query is from Umesh, who is saying, can I get a view on Hindustan Copper and the recent notification from the Jharkhand government? Yeah, so, Umesh, that's a news that obviously that impacted Hindustan Copper 1 or 2 days back. This demand of almost 1,000 crores because of the allegations that there were some statutory compliances and clearances and regulations that were not met. And therefore, the government has slapped the company with this. But beyond this one news, in general, metals have gotten more volatile. So, Chandan, I want to ask you this. A call on Hindustan Copper, and overall, what would the advice be on trading metals? Because after a near one-way rally, 45%, 50% rally in 2025, in middle of January onwards, we've seen volatility come through. So give us a specific take on Hind Copper and then the overall trading setup for metals.
Yeah, so I think the metal really had a fantastic run in last almost 6 months. From the beginning of December to till now, the Nifty Metal Index itself rallied from 3,000 to almost 12,000, gone 4 times, if I talk about the index point of view. But in the recent past, it has been consolidating in a range from last almost 30 days. A couple of the fundamental changes. One, the precious metal corrected from highs. That's why most of these counter witness profit booking decline. But major trend is positive, and I suggest to go with buy on decline stance. Talking about Hindustan Copper on a specific point of view, it witnessed a corrective move from 760 to 545 level. I believe 520, 510 is the higher base. And with this support, I believe it can again head towards 615 to 630 kind of level. So buy on decline could continue in counter like Hindustan Copper. And in metal basket, we have also positive on the counter like Tata Steel or Hindalco, which is quite positive and promising on the daily, weekly, and price setup as well.
Okay, all right, got it. By the way, the first of the pre-open trades are in, but they're all over the place, which is why I'm not going to give them too much of importance. You can see that when Nifty is down 400 points, highly unlikely. So this is the first minute of the pre-open, so let's just wait for it to settle. And we don't have to, all the rates also coming through right now. So yeah, suddenly Bharti Airtel 5% lower, Shriram Finance 5% lower. So we need to give this some time. ONGC, by the way, is one rate which seems very believable. ONGC in the pre-open has started almost 2% higher. And that's very natural to expect given the big surge that we've seen overnight in oil prices, a 4% rally with Brent heading to $70 a barrel. ITC, we were just discussing some of these FMCG names with our guest. ITC seems like it'll continue that uptrend. 1% up on ITC as we speak. And then there is Lever. Lever is up about 1% as well. So let's wait. Now it's a 200-point drop on the Nifty. Like I'm saying, let's wait for it to settle. There's some green on these tech names. They came under pressure again yesterday. So, it's one day up, one day down kind of a trade on IT as well. Chandan, very quickly, so oil prices surging. Is there a short trade, a short-term trade in ONGC, Oil India, in any of these stocks? Throw in a word on some of these cigarette stocks as well, like ITC, Godfrey, if you still see any tailwind continuing there. And definitely a word on IT. You have to be really strong-hearted to do short-term trades in IT. It's very, very choppy out there. So any advice on these sectors, cigarettes, technology and oil and gas?
Yeah, so I think all these sectors are coming into the volatile behavior of the market in the recent scenario. Yeah, let me comment on the Oil India and ONGC first. I believe oil marketing or oil exploration company will do well. Major trend is positive and most of these counters have seen a corrective move in last almost 18 days. So to talk about ONGC, just a couple of days back, it made a high near 280 marks, and after that witnessed some corrective move. But major trend is positive, and buy on decline could continue. Given the scenario of surge in oil prices, I believe positive stance could be there. So with the support of 254, ONGC has potential to head towards 278 to 282 kind of level. Talking about Oil India as well, it has been making lower top, lower bottom, but now it's near to its 50-day exponential moving average. So with support of 440, it can head towards 475 kind of level. Now to comment on FMCG or ITC, I believe FMCG will do well. We are more constructive, positive on counter like Marico and Colgate with the consolidation breakout on the daily and weekly chart with surge in delivery volume. But yes, to specific on ITC, trend was negative on the weekly chart as it was making lower top, lower bottom. But now it seems that support-based buying is visible with some deep oversold territory on the daily price setup. So most of the mechanical indicators are indicating about the deep oversold territory and the bullish divergence. It already seen a recovery from almost 310 to 330 in last three trading session, giving a consolidation breakout on the lower time frame. So it would be tough to play, but looking for some recovery with support of 324 for an upside target towards 345 to 350. So play bounce. I don't know whether the momentum will turn to the further positional trade, but as of now, looking for some recovery. Now to comment on Nifty IT, it's quite volatile. So you need to be very selective in the Nifty IT name. However, on weekly chart, it is getting a structure of small dozy sort of candle, which indicates that now tug of war is visible after the decline of last 10-12 days. So, but I'll be very specific on the selective name. I can focus on counter like TCS or Infosys to look at the bottom out approach. But one need to keep in mind that but try to accumulate 2-3 times rather than looking for immediate momentum, because these counters have seen volatile move. IB has turned higher, so volatile Q could be there. Better to wait and watch and let them settle out for next few days to look at some bargain hunting here.
Okay, fair enough. So just be patient and let IT settle down. That's the advice coming in. Chandan, before we let you go, what are your best trades for the day?
So I think one has to be very selective in this market scenario. And I'll look at a few counter from auto ends. So Motherson Samvardhan is one counter which has seen a positive price pattern on the daily and the weekly chart. In fact, on the daily chart, we are witnessing a price pattern similar to bullish pole and flag, which has the positive implication. So with the support of 129, Motherson Samvardhan can head towards 141 kind of level. And as I mentioned that we are quite positive on PSU Bank, whether you talk about Union Bank or Indian Bank, but here we'll suggest to buy on Indian Bank with support of 918, it can head towards 980 kind of level.
Okay, all right, got that. Chandan, thank you very much. Great to have you on the show this morning. Very, very helpful advice coming in for people who are looking at either short-term or even positional trades. You have a great day, and we look forward to connecting again. Thank you so much. Thank you.
Thank you.
Okay, before I introduce our next guest and be ready for a quote-unquote powerful discussion, if that's a hint, let's quickly look at the screen now, because now the Nifty has settled in the pre-open session. It's about 5 minutes past 9. And we have a rate of about 25,900 on the index. So again, building on those incremental gains. And the start seems to be positive by about 70 to 80 points. So it's not bad at all. Now we can put the Nifty, movers and shakers up for you on the screen as well. That's the Nifty. It's settled down. The gainers include names like Hindalco, ONGC, Tata Steel. So a lot of commodity stocks are, up on the screen today. There is continued interest in FMCG names. So ITC, Lever. These stocks are on the gaining side. And some of the large cap names like TCS, HDFC Bank. Right now, the indication is that they could start positive, but let's see how this goes. On the flip side, you have Interglobe Aviation, Asian Paints and Titan. These are some of the stocks under pressure. So we'll keep flashing some of these rates for you as we welcome our next guest. And our next guest is someone who tracks the power and the capital goods space with a lot of detail. He also looks at defense, but today we're going to limit the scope of our conversation to really power and capital goods. Amit Anwani is joining in from PL Capital. Amit, thank you so much. Great to have you with us on Moneycontrol. We have been connecting on these subjects very, very frequently over the past many years. So I'm glad that you can do it for us here and help our viewers on Moneycontrol as well. Amit, I want to start first by, and yesterday, by the way, some of these power-related stocks were very excited, names like Schneider, etc. They were rallying. Power Industries was rallying. So let's start with understanding whether there is any Q3 tailwind that's making people excited. What really happened in Q3? Let's do a quick, report card check for power and power equipment makers.
Hi. Thank you, Surabhi, and good morning to all of you. I think, as you rightly pointed out, if you see in terms of power equipment, especially the electrical equipment companies like Hitachi, GE, and we are seeing a lot of other companies. So just to put context, a lot of companies are getting benefited from two to three major tailwinds which are going in from past couple of years. So one is a massive capacity addition for renewable, which is envisaged in domestic market. We saw, in fact, for the 11 months of F26, the addition of capacity, power capacity is roughly upward of 50 gigawatt, which is kind of all-time high. So all these numbers are setting up the requirement for parallel transmission infrastructure and also the demand for electrical equipment and components for many capital goods companies. In that context, is another major theme which is also now much talked about after the AI boom, is the opportunity for many data centers which is spanning out for all these capital goods companies in domestic and export market. So just for instance, there have been multiple tailwinds for companies in backup power. Cummins India talked about 25% of their power gen sales coming in from data centers. A few companies got a breakthrough in cooling solutions in outside market, including Thermex. They got a couple of cooling solutions order for data centers outside India. And Praj Industries also talked about exploring data center, particularly for the cooling solutions. So all this tailwinds are coming in for the capital goods companies from the data center. The frontline companies including G Energy, G Vernova, Hitachi, and Siemens Energy, which has been, riding on the HVDC boom because we want to integrate renewable energy to the main grid, and we have optimistic targets as a country to have at least 50% renewable is also driving very strong pipeline from the grid side, which is benefiting all these companies. So I think
Sure.
multiple things domestically also very strong power demand, and globally also few companies are building up to supply to the global markets, which is driven by AI data centers.
So,
Yeah.
so Amit, yeah, and I want to come to that. So, okay, let's do this. I'm trying to simplify this as much as possible for our viewers. So, if you could bucket some of these stocks in different categories, maybe some could be the renewable tailwind, like you said. Some could be just basic thermal demand when companies like Thermax supply to, all the thermal power producers as well. So, legacy or traditional power, the data center, potential beneficiaries. So, if you could just segregate the companies and name them, that will help our viewers. And then tell us which of these baskets would you be most optimistic on?
Right. So, in terms of segregation, as I discussed, so first, if we come to the renewable integration, which is, driving more HVDC lines to come for tender. Now, these are all very big ticket orders which have came in the past. The companies like Hitachi Energy, Siemens Energy, GT&D have been kind of very well prepared in terms of the HVDC technology. So whatever is coming in terms of domestic integration on for renewables, where we target to integrate 500 gigawatt of renewables by next 6 years. I think all these companies have a very strong tailwinds. We have seen Hitachi Energy winning orders, large scale orders in the past. And we recently saw GTMD also getting one order in HVDC. So there are a lot of tailwinds for these companies. Now HVDC pipeline for next 2 to 3 years is upward of at least 4 to 5 projects which can be tendered out, and the value could be upward of 1 lakh. So only three possible players which are riding here, including Siemens Energy, Hitachi, and GET&D. And we are seeing their order book, growing rapidly. So, for instance, Hitachi Energy is from 10,000, they're at
Yeah.
about 30,000 order book. For GET&D, the order book has grown from 12,000. Probably they'll be closing this year order book at 26, 28,000. So this is one pie. Now, all these companies are parallelly also talking about the data center
What
part.
about the
So now data
valuations,
center in,
Amit? So,
yeah,
oh, okay, okay. So,
yeah.
okay, that's important. Okay, then before we talk valuations, let's understand that. So these stocks that you've named, these companies, they anyway have this big tailwind. They're executing these large HVDC orders,
Yeah.
and they're part of that whole plugging in the renewable chain. But which of them also have a data center play? That I mean, they will be big providers, energy providers to these power guzzling data centers, and then we'll talk valuations.
Right. So, if I talk about all these big MNCs which have, Indian subsidiaries which I highlighted, for instance, Siemens Energy has roughly about 25% exports, and they have been talking about supporting the global parent in terms of data center requirement for transformers and few other ancillary products like switch gears. Hitachi Energy is 25 to 30%. Now, Hitachi Energy is really banking big in terms of data center requirement, especially in the outside India market, especially the US market. So Hitachi Energy has been talking that they're completely ready with respect to the products which are going to required for the global data center market. And all these companies, including Hitachi, has expanded their capacity base in India, and a very strong commentary for data center supplies in the global market. GTND has roughly about 27% exports, out of which they have been supporting to their global parents. They have not openly talked about data center exports per se, but through global parent, definitely they're kind of beneficiaries to get the order there. So I think broadly, if I put in context, Hitachi Energy is something which is very vocal in terms of the global data center market, where they would like to be at the front end in terms of products.
Sure. Sure. Amit, just allow us a couple of minutes. The market is opened. So let's just look at rates, and then I'll come back to you to complete this point. 41 points up on the Nifty. So it's a quiet start, but it's a positive start. Let's see if the bulls can build on it. That's the critical question, because remember, this is the zone typically where some resistances start coming in, and the market gets shy every time it approaches the 26,000 mark. So let's see. Okay, in terms of movers and shakers, Nifty up 35 points. Mid-cap index is absolutely flat. The bank Nifty is absolutely flat. You can see that. I mean, 2, 3, 4 points, 9 points, 2 points. That's how it's blinking. So it's a very, very quiet and very, very cautious morning. Okay, let's talk about stocks. Which are the stocks that are positive on the Nifty? ONGC, like we've been mentioning, this big surge in oil prices is working well for names like Oil India and ONGC. Some tech names have rebounded. Tech is always one day up, one day down story kind of a situation. Today it's that up morning. So HCL Tech 1.5%, Tech Mahindra, Infosys, TCS, all of these stocks are up between 1 to 2% at least right now. A couple of the metal stocks are shining bright. So there is Tata Steel, there is Hindalco, there's gain on some of these names. Lever announced that 2,000 crore rupee investment into the business. Stock is up about 0.25%, not too much. Banks are a little quiet. SBI is up about 0.25% as we speak. Eternal is managing about 0.5% gain as well. So these are more or less your names on the upside. Dr. Reddy's, which has announced that a small acquisition to boost its gynecology portfolio, that stock's up about 0.3% as well. Now flipping this over with the losers, and these are the names: Interglobe, Trent, HDFC Life. As you can see, there are no major cuts. I mean, no stock is like sliding or anything. So there's general some caution out here. Reliance is also slightly weak. It's down about 0.3%. Apollo Hospitals is down about 0.5%. So that's the Nifty, extremely quiet. Let me go beyond the Nifty and look at some of the newsmakers. We should definitely pull up NCC. NCC was a stock in focus because of the ban that it has got from NHAI. For the next 2 years, it cannot bid for any more NHAI orders. So no surprises there. NCC is down 4.5%. That's the one stock in news. The other one is BL Kashyap. BL Kashyap is flying away. It's won an order. I think 300 crores odd was the value of that order win. So BL Kashyap is up 3% because of that. MCX, which has taken away its margins on gold and silver, that's another stock which is holding up quite well. BL Kashyap's order was 300 crores, like I'm saying, and MCX has taken away those additional 3% margins on gold and the additional 7% margin that was levied on silver when the prices got very volatile. Then these additional margins were levied for the sake of risk management. Now they've been revoked, and that's showing up quite positively on the stock. So those are some of the movers and shakers on basis of news. Now let's talk about the overall mid-cap gainers and mid-cap losers. On the gainers screen, I'm seeing stocks like HBL Engineering, NetWeb, which announced a tie-up with NVIDIA yesterday. It's still going very strong, 4% up on NetWeb. Cochin Shipyard has been winning so many orders, including a French order that they announced yesterday, 2,000 crores. That stock's up about 1.5%. What else? Sula Vineyards is up. There's Lakshmi Dental, recent listing, 4% higher as well. And those are the other names: LIC Housing Finance, Bharat Forge, Coforge. Like I'm saying, a lot of IT is up today. Let's see on the losing side if there's anything noticeable that's worth calling out. Interglobe Aviation is weak, 1.5% down. I guess this is also a bit of a sentimental rub-off effect with crude surging so much. Brent is back above $70 a barrel. Maybe that gets people a little cautious. So those are the stocks. The oil marketing companies are lower. So oil is a big trade today. The upstream companies are all rallying, and the downstream consumers like Interglobe are down. BPCL and HPCL are also lower, down 1.5% on some of these stocks. Let's pull up HPCL, BPCL, IOC. All the oil refining stocks are under pressure with the surge in oil prices, and we need to watch the screen because again there's a lot of rhetoric about the possible use of military action in Iran. JD Vance saying that Iran is not really meeting all the red lines that President Trump has outlined, and that's what's brought the risk premium back on oil prices, and that's the reaction playing out on individual stocks. Okay, that's the market. We'll keep flashing stocks for you. Right now it's still very, very quiet, 40 points up on the Nifty. But Amit, to complete our conversation, So you've outlined a lot of the opportunities out there, whether it's the renewable integration, whether it's data centers. Now the question is how much is already in the price? So for this pocket of stocks, Hitachi, GET&D, Schneider, how are the valuations at this point?
Right. So if you see, I think all these stocks, when there was a news in terms of Chinese curbs getting relaxation, and market was expecting that probably this would also impact all these MNC frontline companies. But many companies clarified that in fact it should be benefit to them in terms of better project execution, because they might were getting impacted because of, let's say, the not so critical component which probably has a shortage in Indian market. So that way, I think the Chinese curve dumped all this stock by 20-30%. Now from that lows, all these stocks are up by almost 25-30%. And today, they probably stand in terms of valuation between 53 to 55x 2 year forward. Now, having said that, if you see what is also kind of notable is that in terms of growth, all these companies will probably be seeing a J curve with the kind of order book they have accumulated over past 24 months, and what is expected over next 24 months also. For instance, G probably is building about 40-45% PAT CAGR. Hitachi Energy is building on about 70% PAT CAGR. Siemens Energy about 30-35% PAT CAGR. So having said that, definitely the prices and valuation comfort is not there at the moment, but they are sitting on something quite substantial and interesting. As I said, despite there's a local order pipeline which is quite strong, the data center global plus domestic is also emerging for many of these companies. So in terms of structural tailwinds, definitely they'll be in a positive territory. And just to put a context, so if you see in terms of capex announcement also by all these majors over past 24 months, should be estimated on the industry level about kind of 10,000. So for instance, Siemens Energy recently announced 2,000 crore capex, and this was addition to they already announced probably 1,000 plus capex in the past. Hitachi Energy has already announced upward of 2,000 crore. GTN is announced almost 1,000 plus crore. So if you see, there's a massive capex which is happening to probably add 40-50% of capacity, since all these companies are envisaging a very strong demand in terms of all these electrical products plus the
Yeah.
other electrical requirements
Yeah.
for data centers plus domestic
Yeah.
are grids.
So, so,
So there's a
so Amit,
valuation
final
discomfort,
question.
I
I
would
take your
say, at
point
this moment.
completely.
Yeah, yeah.
Okay, so there is some valuation discomfort. You acknowledge that. So what I'm asking is, Amit, that I think the kind of opportunity that you described, that's not going away. The data center opportunity, renewables. The question is, you just need to know what to buy, and it should be at the right price, right? So given the fact that you're saying valuations are still elevated, do you like anything? I mean, if I want to buy one of these or two, three of these stocks and have at least a minimum 1 year horizon, if not longer, then are there any opportunities that you'll call out?
Yeah, so GTND has been one of our topic at 3,000 also, and when the correction happened, we have a 4,000 target price. The stock is at about 3,700 today, but I see very strong tailwinds. There's one more large order which is on the anvil, upward of 25,000 crore HVDC order, where probably G and Hitachi would be the only two contenders to beat for that order. And whoever wins will have a substantial addition to their order book, and probably the EPS again getting re-rated for the forward years. So GTN is something I'm positive about, also in terms of kind of export getting added. The company has outlined Asia for Asia strategy in their presentations, where they're focusing on a lot of localization for many components which are kind of imported from the parents. Plus, the addressable market has gone up significantly higher in the electrical equipment market from 25%. They're at 40% addressable market in India and probably targeting 50% addressable market going forward. So I see multiple tailwinds here. And if at all I have to pick, probably GTL is something I'm looking for. But see, I have few other stocks in the small cap where the valuation comfort is also there, like Voltam. So probably not immediate beneficiary for the HVDC pie, but they have also been talking about supplies to data center plus power transformer supplies to transmission companies. Voltamp is something kind of constrained by capacity. They are already at 100% capacity. We have a buy rating, I believe, probably the stock is trading at about 21, 22x, where the possible 20-25% upside is possible. So, what is going to drive this is they will probably be coming up with the capacity expansion which they announced 1 year back that is coming on stream in next 4 to 5 months, and after that they'll be able to do at least 20% growth on the top versus this year, which probably is mid-single digit. So this
Okay,
is
all right.
something
So
where I have a
GETND
comfort,
and
but
Voltamp. Go on, go on. Yeah. So these are the two stocks where you have some comfort.
Yeah, so I
Okay,
think
all right.
that's
Interesting
I
conversation,
wanted to
Amit.
highlight.
Okay, got
Thank
it,
you,
got it. Thank
always
you
a
very much,
pleasure.
Amit. This was a helpful conversation. Yeah, it really gives viewers some context. It helps people start thinking on the lines of how to do this, because these are multi-year opportunities that we're talking about, right? Data centers, renewables. It's just you need to figure out which company to
That's right.
back and at what point and at what price. So very, very helpful. Thank you so much, and we hope that this is the first of many. Look forward to connecting again. You have a great day. Thank you.
Thank you. Thank you. Same to you. Thank you.
All right, so thank you. That's a view from PL Capital on power equipment and why you would probably want to look at some of these stocks in more detail, because the data center opportunity keeps bringing these momentum rallies, and we saw some of that yesterday. A couple of these stocks are very, very active in the market yesterday as well. Okay, before I introduce our next guest on the show, let's quickly turn back to the screen. The screen is not doing anything, at least at the index level. It's absolutely flat, absolutely quiet. Just put up the Nifty and the mid-cap index, maybe the Bank Nifty. Things are absolutely quiet, at least as of this morning. So, good time to introduce our next guest on the show. Dheeraj Relly is joining in. He's MD and CEO of HDFC Securities, and there is so much to talk about: investor psyche, investor sentiment, trader psyche, and trading sentiment, more importantly. Mr. Relly, good morning. What a pleasure to connect with you. We've, of course, spoken on CNBC several times, but I'm so glad you can join us here on Moneycontrol as well.
Pleasure is all mine, Surabhi.
Mr. Relly, thanks so much. I don't even know where to start, because so much keeps happening, which is always, the debate is around whether there's too much trading in our market, whether it needs to be reduced. One day there's a SEBI notification, and someday you hear about STT being hiked. And the latest is obviously this whole RBI move to curb trading activity, or not to curb trading activity, to basically limit financing to brokers. But before I talk about some of these regulatory developments, Mr. Relly, let's get your overall sense. The market has digested so much news and so much noise. How do you right now sum up just the investor and the trader mood out there?
So we are back to basics, back to fundamentals. I think if you have to look at the markets, you will have to go back 18 months. We have been underperforming global markets. We have been witnessing a downturn in the Indian capital markets from September 2024 onwards. So it's been almost 18 months of down cycle. We've seen a lot of it was attributed to the earnings related issues and also valuation related issues. And on top of it, we've had many overhangs like US and India tariff related issues and also geopolitical issues. I think if you look at the current context, most of the concerns are behind us. In fact, the sensitivity around the AI impact on the IT sector also somewhat starting to getting priced in already. So my take is that most of the big overhangs are behind us. From here onwards, I think we are looking at good FY27. This is a difficult phase in the market. When you see a lull or you see a lackluster or a downtrend in the market for 18 odd months, it's hard to believe that from here onwards markets can improve. But that's when the smart money comes into the play. They smell, they sense the opportunity, and that's where they start moving in when the cycle is about to turn from here onwards. And I'm saying so on the bedrock of earning expectations. So we'll get close to 15% kind of earning growth in the next fiscal. This year we'll end up close to 7.6% kind of earning growth. So when earning growths are back, we will see valuations also become reasonable. If you look at the Nifty EPS is likely to close at about 1080 in this fiscal FY26. If you look at trailing valuation, it would give you almost 23, 24 P multiple. But when you bake in the 15-16% of earning growth, the next year Nifty EPS could be around 1280, which means we are back to the 20 odd P multiple, which is very reasonable. And also Indian MSCI premium over emerging market MSCI premium have come down from the 112% to now about 66%. So when I am looking at all these factors and all variables, I see a turnaround viability from here onwards.
Okay, by the way, the visuals on the left are all coming in from the AI summit. We just saw the Prime Minister there. He has arrived, he's in the audience, and he is flanked by top global leaders. I think leaders of over 20 countries are there. And the way the proceedings are shaping up, I think 9:40 is when we'll have the official inauguration. Right now there's this audiovisual clip playing out. 9:40 is the official inauguration of the event. And then the Prime Minister speaks at around 10:15, 10:20, thereabouts. And of course, we'll keep getting visuals and all the action from the AI summit. Speaking of AI, Dheeraj, so okay, actually that's a relevant question. From a broking industry standpoint, Dheeraj, what is happening? I mean, how are you getting AI ready? There's been a lot of debate about whether research, for instance, will become even more commoditized. What is AI going to mean for stockbrokers in India?
See, AI is going to be omnipresent. It would have a positive rub-off in almost all industries. We are taking AI as an enabler and not as a threat. We believe that it will, improve our productivity. It will automate a lot of routine and mundane job and also open up opportunities for you. Specific to the research, I think we all do modeling there. We all collect the information, data, and analyze it and able to come out with the reports after doing multiple channel checks and speaking with the management. All that can be done more effectively. And this would mean that today, if we are covering about 260 companies are in institutional equities and another 100 odd companies in retail research, this will pave way for us to cover another 300, 400 companies to start with, and then later on add to our coverage. So it's going to improve the coverage. It's going to improve the quality of the coverage. So we are going to leverage AI big time in terms of improving our productivity and automating the routine task. And this is not only up to the research. I think it's got to do with every activity we do. I'll give you one example. So it'll be on client engagement. Now, clients are not only interested in overall markets, how they are moving, like Nifty or Bank Nifty and so on, but they are more keen to know what's happening on their stock specific. Are there any corporate actions? Are there any news that can impact the price or any other action that can impact the overall portfolio? Then that's what exactly they are looking at. And humanly, it's impossible to go to millions of customers and update them on the stocks in their portfolio in the real-time basis. Whereas with the advent of AI, this is absolutely possible. We've developed a nudge engine. This nudge engine will help us to enable us to give a real-time notifications to our customers on the corporate actions and specific corporate news. I think this is a big value add for the customers. and it's very hyper personalized niche information that they will get. Earlier, they were getting more generic inputs and waiting for analysis to come at the end of the day. Now it will be absolutely on a real time basis. Also, we are reaching out many customers
Okay.
with a lot of dissemination. So that dissemination can also be automated through the agentic AI.
Okay. All right. So
Yeah.
that's how you're gearing up with AI. But Dheeraj, now we have to come to the crux of it as well, right? This whole regulatory move and so many of those regulatory moves. So let's try and understand what this means. Obviously, there was a lot of panic and chaos on Monday, Tuesday. Stocks fell as well because it's become very, very clear that the RBI has tightened the screws when it comes to bank financing and bank lending to stock brokers. And we'll just put up the graphics for the benefit of our viewers. So basically what the RBI is saying that all funding going to stock brokers, to capital market intermediaries really, not just brokers, even exchanges, anyone who is in the capital market ecosystem, all of that bank funding should be 100% secured, and 50% of that security must be in the form of cash. That's the starting point. And there are a couple of other restraints as well. There is obviously that big point on proprietary trading, prop trading. Now, there the RBI has said that, and prop trading essentially is the trading that stockbrokers do on their own account, out of their own money, out of their own book, not on behalf of their clients. So, the RBI said that there will be no bank funding for prop trading unless that funding is 100% backed by collateral. Dheeraj, how onerous are these norms, and what will this mean for brokers?
I think, Surabhi, it's been not decoded well by most of the participants, and that's where there is a panic or there is a concern. This is not at all absolutely onerous. I went on your channel at 8:30 a.m. to explain the same on Monday as well, but I'll do it again. There is no impact to the brokers who are transacting on behalf of customers. The impact is there only for a prop brokers, and that's about it. In any case, the brokers who are transacting on behalf of customers, are you giving them platform to transact, they have been taking bank guarantees from the bank, and they can continue to take that. Only thing is that it has to be backed by the collateral. 50% and 25% has to be in the cash, and that's been the existing norm. So there is no change. There is no change for customer facing brokers at all. Even for the brokers who are doing prop book, also trading in their own money, they can also give 50% collateral and 50% cash. So it's not going to be changing their life significantly, but there will be an impact on volume when it comes to prop book, because they will have challenges on the intraday limits, and they will have some challenges on providing collateral. But customer facing brokers, absolutely no impact. All other lending activities by banks to brokers for their office, for their normal business as usual requirement, no problem at all. In fact, this explicit circular opens up opportunity for banks to lend brokers on MTF also, which was not allowed earlier. So now they can lend it to the on MTF also. Currently, we all as brokers borrow from the market participants through commercial papers only, and now we can borrow from the banks also. And also there can be a limits for a non-MTF receivables also. So brokers can borrow on non-MTF receivables also from banks. So I don't think so it's that draconian or onerous.
Sure. And viewers, when Dheeraj is saying MTF, he's obviously talking about margin trading facility, which is basically the margin money that brokers give to their clients. So if they need a bank loan to provide that margin, now that has to be fully secured as well. But Dheeraj, the point is that yes, lending is allowed. No one's stopping the lending. But the fact that it has to be fully secured, 50% cash, is that not going to be a problem?
See, so far, capital market related entities have no specific norms on lending, which means what collateral is acceptable, what margin is acceptable, what haircut is acceptable. This circular only clarifies and make it more robust and transparent. Nothing more than that. The impact is only there on the prop brokers, because that's where they will see challenges in terms of providing 50% cash margin and 50% collateral. That 50% collateral is also cash and cash equivalent. So they can give Government of India securities and so on. There's some more clarity required whether cash equivalent will also include the equities with a 40% haircut. If that is allowed, then I don't see a significant issue here for prop brokers also. In any case, Government of India and exchanges have been receiving complaints on exuberance in the FNO space. So in a synchronized manner, SEBI, RBI and Ministry of Finance have worked on it. I think it's a good action. We are done with most of the action in the FNO space. So whatever volume impact has to come will come as a one-off impact, and after that, people will reconcile to the existing ecosystem and move forward. It is not going to have a lasting impact. I think the most of the issues are behind us. SEBI chief have also been saying at multiple forums and multiple meetings with us also that there will be no more significant actions. So I think it will settle the dust for good for broking industry and for exchanges and for the capital markets.
I really hope so, because I think in the last 1 year, the better part of even my time went in decoding all these rules one after the other. Then there was a mutual fund rule, right? That the brokerage fee has to be capped to 2%, and then finally, I mean, there was some middle ground there. So there's just
2 basis points.
so
2
much
basis
going
points,
on.
2
By the way,
basis
so
points.
2 basis points, and now it's 6, right? They finally settled on 6.
Now 6, yeah.
SEBI
Which is
settled
closer
on
to
6,
what,
isn't it?
which is
Yeah.
closer to what most of the brokers were charging in any case on an average. Yeah. So
Correct,
it's okay.
correct.
It's
I'm
fine.
just
I
saying
think
that
that is
regulation is
also
changing
that
so
that issue is
quickly.
also behind us. Absolutely. Yeah.
That's been settled, yeah. I'm
Yeah.
just saying, Mr. Relly, that regulation is moving so quickly for brokers, it's almost hard to keep pace. You know, I have to maintain a separate diary, I think, or a separate e-pad or something on all the broker-related regulations from SEBI, RBI, so on and so forth. By the way, Sushant Bhansali, CEO of Ambit Asset Management, has also joined us into the conversation. Sushant, apologies, there was a bit of a delay because we cut into some of the visuals from Bharat Mandapam. The Prime Minister has reached over there. I don't know if you could hear our very spirited conversation with Mr. Relly on capital market intermediaries and really what lies there. In fact, I'm going to ask you about that as we go along. But let me take the final question with Mr. Relly, then I'll free him up. So, Mr. Relly, now STT, you digested, the brokerage fee digested. What else? RBI regulations, you're saying not too onerous. Maintaining a good, brave front and AI ready. So, what does the rest of this year look like for the broking industry for you?
I think I just mentioned that last 18 months have been downtrend in the markets. We are hoping that FY27 will be a great year for entire markets. Overall, capital markets will also look good. I think all capital market related entities will have some knee-jerk reaction in the first quarter because all this impact of STT, RBI regulation, etc., will be visible effective 1st April. So we haven't yet seen the impact. My take is that it will impact only FNO space and volumes can come down to 15 to 20% in Q1, and from there onwards probably it will plateau and then we'll move on. So I don't see a significant impact beyond H1 for the capital market intermediaries and as well as exchanges.
So that's important. Mr. Relly, you said FNO volumes in Q1 will come down by 15 or 20% or will come down to 15-20% of the total 100%?
By 15, 20%, not to 15 to 20%. That will be, killing.
I was suddenly shocked.
No. Will come down by 15, 20%. So that's okay. Yeah.
Okay.
Yeah, so
and then that will be the new normal, and then
that will be new normal. That will be okay. I think the many brokerage houses have also re-christened their business model and now focusing more on the cash segment and also on margin trade facility. The book has now moved to over 1 lakh crore, and there are significant opportunity to improve that book, increase that book also. So to that extent, I think all brokerage houses will reorient themselves and work on a different business model. And if at all there is some checks and balances and some sense come to the F&O space, I think it's good for the industry in long run.
Okay, all right. Always optimistic and always front foot forward. That's how we've always known you. And thank you so much for joining today. Great conversation. You're candid as usual. And it really helps to get full context on the ever-changing regulatory landscape. Thanks so much, sir. We hope to remain in touch. And thank you very much for joining us on Moneycontrol this morning.
All the best to you, Surabhi.
Thank you. Thank you. Thank you. Thank you. We will, of course, be in touch with you and your team. Thanks very much. Okay, so let's get to our conversation with Sushant. And as we're doing that, by the way, there's pressure on the market that's visible again. And that's the issue, that there are nerves around this mark of 25,800. Look at the Nifty. That's exactly where it's slipping. Now, there's a 40-point dip on the market. The mid-cap index is down about 0.3%. Let's keep flashing these rates because the market is on a bit of a slippery wicket at this point in time. The losers include names like Interglobe, Asian Paints, BEL, ITC, Tata Consumer. Not too much, but this is the graph. And it is the reverse of what we saw the last 2-3 days, where the opening dip was getting bought. Today, since we've opened at these slightly elevated levels, there's some caution that's creeping in. So we'll keep tracking those rates. But for now, let's get to that conversation with Sushant Bhansali, CEO of Ambit Asset Management. Sushant, hi, good morning again, and apologies, got a little delayed. But yes, let's start from the top. Let's start by understanding how you're thinking about the market and how your fund managers are looking at things right now, because it's been a roller coaster. It's been very noisy with too many events, fiscal policy, budget, regulatory changes, global issues, trade deal, RBI policy. It almost seems like 6 months have passed in this year. But the fact is we are only on the 19th of February.
No, so very true. I think you're perfectly right. Lots of news, lots of events happening, keeping everyone busy. And hopefully that keeps our job alive, because too much noise gets professional fund managers to do their job compared to doing on your own. So probably volatility is good for the business. But having said that, I think the quarterly results have been quite decent, probably better than expected in some pockets, but still on the downward trend. I think another 1 or 2 quarters probably we'll have good earnings, and that's where I think market will go towards north in a full-fledged mode post that. So we'll have to wait for probably Q4 results or probably Q1 for next year for markets to make new highs. Till then, I think we'll continue to be in this range-bound market. And especially, I think mid and small caps will continue to find it difficult for investor interest, because as more time passes and returns are not getting generated, the patience of investors is getting tested every passing day. And that should lead to, I think, the moving up the curve from small to mid and mid to large, which is happening for last few months now. And I think that should continue for some more time. But quite optimistic about the second half of this year, which is where I think mid caps to begin with make a comeback, and then probably towards the end of the year, small caps should again start making.
So, Sushant, for some of your portfolios, and Ambit runs specific portfolios, right? There's the coffee can portfolio, there is the good and clean mid-cap portfolio. Is there any major change that the portfolio managers made over the last 2-3 months? I mean, did the portfolios shift more towards large cap, say? Just want to understand how those portfolios are currently positioned.
Sure. So our portfolios are like market cap segmented, so large cap, mid cap, and small caps. So no major shift in terms of segmental, but in terms of sectoral, definitely, I think, especially on the mid and small cap, one a bit on a bit of cyclical side of it, as well as some new age businesses where we've now found some opportunities and went inside that. So those are the small, I think, little bit changes, not too much. I think the trend on metals and cyclicals, we've, I think somewhere, I think last September, October is when we picked it up. and we started deploying in towards that those sectors in that. And I think this year metals will continue to do well.
Metals, sorry, I missed that. You're saying you're expecting metals to continue doing well this year, is
Yeah.
it?
Yes, I think we are in a global
Okay.
super
Okay.
cycle of
But
commodities. Then, yeah, go ahead, sir.
okay. Yeah, go on, Sushant.
Yeah, no, I think we are in a super commodity cycle globally, and that shall continue for some more time. So you need to be in those spaces as well. A little bit with a lower weights compared to, I would say, index, but still we need to be better than everything.
That's interesting, Sushant. You think the metals segment, it still offers valuation comfort because there's also been a very sharp rally over the last several months, right? In most of these metal names, whether it's ferrous, non-ferrous, Hindalco, Hindustan Zinc, Vedanta, every single stock has run up.
Yeah, no, that's what I said that we picked it up somewhere September, October last year, and last 4 5 months have been amazing because of that we didn't miss this side of the portfolio.
Okay, got that. So that's that's the preference for metals. Now, Sushant, I know that the coffee can portfolio in particular always had select consumer stocks that always made the cut for its manner of investing. In fact, let's just get those names up on the screen right now. I've got I have most of them over here. So if we talk about the coffee can portfolio, which is Ambit's portfolio that has a lot of large cap names, there's Bharti Airtel, there's Eternal, there's HDFC Bank, Eicher Motors, HDFC Life. Financials are a large part of it. There's also retail. There's also a fair amount of consumer staples and FMCG in that portfolio. So a lot of people feel that this might be the year of consumer stocks. But beyond some of the discretionary consumer names, Sushant, I mean, it's been a false start last many quarters. What are your fund managers convinced about when they look at plain consumption?
I think automobile is the one which has got the best in terms of earnings so far and will continue do well. And that's why if you look at our portfolios as well, auto is amongst the highest consumer holdings from our perspective. And other segments, I think, especially discretionary side, see, we had a bad summer last year. And that's why consumer durables, consumer appliances, because of, I think, a higher interest rate, which are getting lowered down. I think we are hopeful that this year we'll have a better summer. El Nino is there as well. So this year, I think consumer durables should do well. Probably more around, I think, May, June onwards. And we are positioning ourselves on that as well now.
All right. So Sushant, I know that you folks also run an international fund out of GIFT City, right? It's a mid-cap fund. And I think that's a fund that pulls in a lot of Japanese money. It's a small cap fund and it pulls in a lot of Japanese money to invest into the Indian market. So what's the thought process there? Because I mean, the small cap market has been quite difficult actually, last 12 months or so. So what is the positioning for that fund and what are your expectations there in the small cap arena?
Yeah, it's a well diversified portfolio. We have like more than 50 stocks into that fund because it's an underlying mutual fund in Japan. And definitely it's been 1 year plus now for us. And since I think we started the fund, the small caps have been quite a tough segment to work around. And we've been navigating. I think our strategy is to buy and hold. But in this tough market, you need to do, I would say, more than average churn, and which is what we have alluded to. We played, I think, in the first half of last year, I think hospitals did well for us. And I think towards the end, I think commodities and capital market commodities is where I think we try to get the find the portfolio.
Okay. All right, Sushant, final word of advice then to investors. Like I said, it's been a roller coaster already in 2026. So what would you tell investors out there who've been holding the faith, keeping the faith over the last 1 year?
No, I think mid and small cap provide an interesting opportunity. I think valuations for the first time, I think in the last 18 months are looking near reasonable. think another 2 or 3 months, there will be many more opportunities, and one should start building the portfolio in mid and small cap now, probably to begin with mid caps and then to small caps. But not in a rush. I think the opportunity will be there for some more time till investor patience goes fully out on small caps. I think that's the time to just go all in. But FY, I think 2026 looks more promising to us than 2025. Hopefully, I think large cap probably like Nifty delivered 10% around it about last year. Hopefully, will be a bit better than that. But mid and small cap, I think, is where I think towards the end of year is where we believe there is lots of money making opportunities. So stay tuned and focus on earnings. I think Q4 and Q1 is which will decide the market mood toward the end of.
All right, so keep your eye on earnings and wait for the mid-cap and small-cap recovery. Got that? Great conversation, Sushant. Thank you very much for joining in. You have a good day, and we look forward to being in touch. Thank you. Okay, as we come to the final leg of the show, the news from the market is that the Nifty is still down about 32 odd points. The mid-cap index is also subdued, down about 0.25%. So it's a quiet Thursday. The bias is slightly negative. There's no major slide, but the market is cautious after having a good couple of days. Let's tell you about some of the interesting brokerage reports of the morning as well. There is a negative call that's come in on Dixon this morning, and that stock is also under pressure. Dixon is down about 2%. CLSA has downgraded Dixon to a hold from their earlier rating of outperform. They've also cut the target price to 12,100 rupees a share. Now, why is CLSA negative on Dixon suddenly? They're saying that this AI-led super cycle, need to see how Dixon is going to navigate this. They're saying that high bandwidth memory and DDR5 demand is strong. India is exposed to a supply squeeze as AI-grade memory has been prioritized globally. Let's talk about Tata Steel. Motilal Oswal has maintained a buy rating. The target price is 240 rupees a share. Motilal says that it's positive on the strong domestic demand for steel, and the safeguard duty is offering plenty of support. And they're saying that the capacity expansion underway at Tata Steel is going to be aiding earnings growth. So that's a positive view coming in. Motilal has also come out with a note on JK Cement. They're retaining a buy rating over there. Target price is 6,780 rupees a share. And they're saying that there's a strong demand being witnessed in North and Central India regions, which is going to be positive for JK Cement. And then the company's expansion, which is underway, will also, of course, help boost the top line and the bottom line. So that's what makes them optimistic. A couple of interesting broking notes over there. All right, with that, let's come down and talk about the AI summit, which is underway. Now, before we get to the Prime Minister's speech, which is expected in the next couple of minutes, let's talk about what happened yesterday, day 3. Now, yesterday featured some of the biggest global voices in AI. Sundar Pichai, CEO of Google, called AI the biggest platform shift of our lifetime, saying that India has a rare opportunity to leapfrog old gaps and chart an extraordinary growth path. Then there was AI pioneer Yoshua Benigo, who cautioned that big tech isn't investing enough in AI risk management, is warning that companies are fixing problems reactively. That was another interesting takeaway. Then Jimmy Wales, co-founder of Wikipedia, stressed that attribution is an ethical responsibility. He dismissed Grokopedia as unworkable. And then we had a view coming in from Sriram Krishnan, senior White House policy advisor, who said that the US wants allies like India to build on the American AI stack. Here are some of the big voices from day 3.
I believe India is going to have an extraordinary trajectory with AI, and we want to be a partner. AI is the biggest platform shift of our lifetimes, and one of the most powerful tools to solve problems and improve lives at planetary scale. Whether it's making diseases more detectable and treatable, communities more resilient, or learning more accessible. For countries like India, AI presents a chance to leapfrog age-old gaps and create new opportunities.
You've warned that AI safety must come before profit how do you square that in a highly competitive global AI race? How realistic will it be to expect that, companies will not prioritize their own investors?
It's very simple. If we don't take care of safety, there's going to be accidents. There's going to be people angry about big tech, about the technology. And even deployment will be problematic. So these agents that companies want to deploy, there's no oversight. There's no human in the loop. If they start doing really bad things, people will not want to use them because they will not be trusted.
Right. Do you think there is enough safety net right now by companies? They claim that they have put safety standards in place. Are you satisfied?
No, I'm not. I don't think that there's enough investment in risk management, in also revisiting how we design those systems so that they will be safe by design, which is not the case right now. And companies are patching the problems one after the other, but they don't really have an answer to the question: is this going to be safe? They don't know.
Wikipedia has been, accused of being Wokepedia. That's something that Mr. Musk, who is also your contemporary, has referred to Wikipedia as. And he himself has, is coming up with Grokepedia. What do you see that replacing encyclopedias and Wikipedia? Because like I said, that there are so many users of AI. ChatGPT has become almost second to Google now. And right, so how do you see that disrupting this whole space?
In terms of that impact of AI and people's reading habits, how they're consuming information, well, it's really important to understand all of the AIs are trained very, very much on Wikipedia data. That's important. We believe that attribution is an ethical responsibility, and many times it's a legal requirement. It's certainly one of the few things we ask if you use our content is to cite your source and to give credit. And the AIs haven't been very good at that, and so I think that's an area that we need to see improvement. But certainly, we've experienced many times the change in how people are accessing information. The shift from desktop to mobile was really important a few years back, and we didn't know what our place would be in that, but of course obviously we're massively popular there. So yeah, it's too early to say.
And on the competition between Wikipedia and Grokepedia.
Oh, there's no competition. I don't know of anyone who uses Grokepedia. So
but you don't see that picking up either?
No, I don't think it. I think it's a ridiculous idea and will never work. So yeah.
We want to make sure the world uses the American AI stack. And what does that mean? That means from the bottom up, it means our semiconductors and advanced AI chips, NVIDIA, AMD, Google's TPUs, Cerebrus, so on and so forth. Second, we want to make sure the world uses our AI models, all of the companies that I listed above. And third, it uses our applications and builds applications on top. And we want to be sure we are amazing and easy to do a business with. And, and that's what we've been really focused on. America is going to have a minimum of $600 billion in investment across the hyperscalers next year. That could be a conservative estimate. And this is going to power AI training runs, data centers, compute. And we think all of our allies, and India as a key ally, should be leveraging and building on top of this infrastructure.
Once in a generation scale. I know we have the capability to do this, and looking at the leaders here today, I believe we also have the will. Now we must do the work together. Thank you.
Thank you, Mr. Sundar Pichai, for that warm and insightful address. Excellencies, ladies and gentlemen, it's a great honor to invite His Excellency Antonio Guterres, Secretary General of the United Nations, to present his address. A global leader championing peace, cooperation, and sustainable progress. Please join me in giving him a warm welcome.
Prime Minister Modi, thank you for your kind invitation and congratulations for India's leadership organizing the first AI summit in the Global South. Meeting in India has special meaning. It brings this conversation closer to the realities shaping much of the world. Because the future of AI cannot be decided by a handful of countries or left to the whims of a few billionaires. Last year, the UN General Assembly took two decisive steps. First, creating an independent international scientific panel on AI. And I'm happy.
Okay, that's the live coverage coming in from the Bharat Mandapam at New Delhi, where the AI Summit is underway. In the next couple of minutes, we'll have the Prime Minister address the gathering. Keep it with Moneycontrol because live coverage continues from the AI Impact Summit in New Delhi. Thank you so much for being with us on Opening Bell.